Assalamu alaikum, bismillahir rahmanir rahim. Actually, the topic is managerial accounting for decision making and planning. So actually, we're going to cover all this section, managerial accounting definition. What is the difference between management accounting and financial accounting? What is the objective of this accounting? Because our topic for today is managerial accounting, which is one part, and making decision and planning, which is another part, which is related to management functions, right? So also we will little bit introduce ethical standards for management accounting as we know that management accounting, there is no specific standards that control our work as a managerial accountant. It's not like financial accounting. There is accounting standards that control our work, right? So control our performance. And here we have ethical standards. There is no any standards used for management accounting. Also, we were going to see some functions. What is the rule of managerial accounting? And we will introduce decision-making definition, how do managers make decisions, and we will see some exercise regarding making a decision. All these topics we will try to cover in this session. So before we're going to see all these topics, I would like to show you a small exercise before we start our session. So this is exercise to show you the importance of managerial accounting. Actually, just assume there is a company manufactures tables. This company tables. It produces 6,000 tables in a month with a fixed cost of $20,000. So this company produces 6,000 tables for every month, and the fixed cost is $20,000 in total. Fixed cost mean like electricity, like rent, and so on. So this is total 20,000. And variable cost for each table is 6 BD. All right. Selling price is 10, not BD, Bahrain BD, is dollar. Selling price is $10. So we have all this information regarding to produce this table and sales price. So if we want to know how much the cost, the selling price is $10, is clear. If I want to know how much this table costs, there is variable cost 6 BD and fixed cost in total 20,000. If you divide this 20,000 divided by the numbers of tables, which is 6,000. So if you divide 20,000 divided by 6,000, it will be around $3.33. So that's mean cost per one table, 6 as a variable cost for each table, and 3.3 as a fixed cost for each table. That's mean total cost will be 9.3. So what is the scenario here? So there is one customer, he want to purchase 30,000 table, but what is the issue? The issue is that this customer, he will pay only to us $8. What's mean this $8? Our normal price is $10. This new customer, he wants he want to purchase 3,000 tables, but he will pay to us $8 instead of $10. This is first issue. The second issue is that the price, the amount he will give us is $8 is less than total cost for each table. One table, it costs us $6 as a variable cost and 3.3 as a fixed cost. Cost us 9 BD. How he will give us only 8 BD? So some managers, if they don't have a very intelligent managerial accounting, immediately when he receives this order, he will reject it. This is a small exercise to show you how managerial accounting is. So some managers, they said, how I can sell to you for $8 and we sell it here in Indonesia, $10. How I will sell you this table for $8 and it cost me total cost per one table 9.3. So here is the requirement. Note that company have capacity to produce a lot of more than 6,000. They have capacity to produce this over 3,000 because total capacity is 15,000. All right. So should the company accept this order or not? So what is the idea of this exercise? The success managers is depend on the accountant, is depend on the managerial accountant. And if you, so the manager, maybe he will ask you, if you're working as a managerial accountant, manager will come to you, he will ask you, please provide me information, advise me whether to accept this order or not. So then you will prepare a report and you will advise the manager to accept or not. So you should to have experience on analyzing the data, on preparing the report, and give accurate information to the manager. So if you don't do your work perfectly, maybe you will give wrong advice to the managers. Maybe you will say, oh no, don't accept this order because price was given to us is less than the normal price of this table that is here. So this is the importance of managerial accounting. So in this situation, yes, if you want to prepare a report, you should first of all, before you decide whether to accept or not, you should consider only the variable cost. Variable cost for one table is $6. So if you receive any order from a customer and the price given by the customer is more than variable cost, if you can see here, this customer will pay to us $8 for each table, and this is more than variable cost. I'm not talking about total cost per one unit. Total cost per one unit is 9.3. But here, the most important is that price given to the customer for each table, it should be at least more than variable cost for each table, for one table, which is 6. So once the price given by the customer more than variable cost for one table, that's mean you should to consider this order and you should to make a report. And I'm sure that we should to accept this order because it will cover the variable cost for one table per table, and the remaining amount $8 minus 6 variable cost. The remaining amount is 2, and this 2 will contribute with fixed cost. That means it will help us to cover fixed cost, right? So when we accept this order, our production will increase. Instead of produce only 6,000 table, if we accept this order, we will product 9,000 table. And by doing that, the fixed cost for one table will be reduced. It will not be 3.3 as we calculated, or it will be less than that. So when we produce more cost, fixed cost per one table will be less. So the most important is that to compare price given by the customer with variable cost. If it is higher than variable cost, that means we should accept this order. So the answer of this question is that we should accept this order. I will not go with more detail here. We have another exercise we will see on with more information and with the answer. Just this one to show you that so there is some decision that need from us to have experience, to have knowledge, to help the managers to make a good decision, accurate decision. And if we don't do that, our company will get lost. If we don't have more experience, if we don't understand the role of managerial accounting, maybe we will not help managers to make a correct decision, and our company will face a problem, right? So let's go to our topic for today, for this session. So we will start with managerial accounting definition. So what is the definition of managerial accounting? Actually, managerial accounting is one of the branches of accounting. As you know that in accounting, we have financial accounting, we have cost accounting, we have government accounting, there is a lot of branches in accounting. This managerial accounting is one of the branches of accounting, but this managerial accounting, it focuses in providing information to the management. So we will provide information to the management. This information will help manager or assist managers to do a decision to performing their functions in the field of planning, control, and making decision, right? So the managers, they have functions which they will make a plan, they will control, and they will direct the organization and decision. So we will provide information management in order to help them to make a decision to perform their functions, all right, in the field of decision. And there is another definition by the Institute of Managerial Accounting, which is similar to what we explained before. So now we should know, I have studied before financial accounting, which is one type of accounting. So now we are talking about managerial accounting. So we should understand what is the difference in these two types of accounting. What is the difference between managerial accounting and financial accounting? I'm sure that you have taken this course of financial accounting before. So actually, the purpose of information provided by each type of this, for example, managerial accounting, is to help managers make decisions to do their functions, to achieve the organization goals or objectives. But in financial accounting, the purpose of information provided by accountant here is communicate organization financial position to several users, including investors, banks, regulators, and other side parties, including the management of the shareholders and so on. So the purpose of information here accounting, only the user are managers. Only we provide information to the managers to help them to make a decision, which is the main difference between managerial accounting and financial accounting, the users, right? So user in management accounting is only the managers of, while in financial accounting, there are outside users and there are internal users. The managers also will get benefit provided by, provided by financial accounting and external party like investors, banks, and suppliers. So, all right. So, what is the focus for managerial accounting? They focus on future-oriented and little bit on the historical data provided by the financial accounting. So, we are in management accounting. We will focus more on future-oriented. So, one of our work also to provide budget, right, to expect the cost of this product in the coming year, right? To uh, to prepare the budget, sales budget, to prepare production budget, the raw material budget. There is a lot of works that we will do, which we will focus more in the future oriented, but in financial accounting only we focus on the past oriented because at the end of the year we will prepare the financial statement for the last year. For example, now we are in 2023. So at the end of this year, we will prepare a financial statement for the transaction that already happened in 2023, right? So our focus here in financial management is on the past oriented, on the historical information that already happened, right? So there is some other difference here, the role of measurement and report. Actually, as we know that in financial accounting, we have accounting standard. I'm not sure in Indonesia whether they apply international financial standard, okay, or they apply GAP, which is General Accounting. It's introduced, yes, or maybe you have your local accounting standards. Like in Bahrain, they use international financial reporting standard. Actually, more than 120 countries they use international financial reporting standards when they prepare the financial statements. In financial accounting, we have accounting standards, whether it is local or standard or GAP. So we should follow these standards because at the end, there is external auditor. He will check our work and he will certify. He will give his opinion. One of opinion is whether this company they follow the accounting standards. While in managerial accounting, if I'm working as a managerial accounting, I will not follow those standards. Actually, in managerial and management accounting, there is no specific standards like standards, but we have some tools that we should use in order to help the managers to make a decision. There is cost benefit analysis, which is KP, cost benefit analysis. We have also cost value profit. There is some techniques that we have to use in order to provide reports that but there is no any standards that will control our work, right? So here about what is the objective of managerial accounting. Actually, this is some of the important objective, which is very important to provide information to the managers to help them to make a decision to assist in controlling operation. How we will help the managers to control the operation, which is very, very important. So as a managerial accountant, I will provide a budget. For example, there is purchase budget, there is sales budget, there is raw material budget, right? So we prepare budget for all departments in an organization. So those people who work in this organization should follow our budget, right? So at the end of the year, we will compare between what we have made as a plan and what is the actual performance. For example, I make a budget for the next year that our sales should be 10,000 units. So when we start this year, at the end, we will see the actual sales, maybe let's say 9,000 actual sales. So now there is a difference between our plan and the actual performance, and there is a difference 1,000. Our plan is to sell 10,000, but the actual sales it is only 9,000. There is a difference 1,000. So we should investigate why we don't achieve our plan. Maybe there is some problem with marketing department and so on. So we should investigate about this difference, and we should to make a decision how we can avoid those problems in the next or in the future or in the next year. So managerial accounting is very important that will help managers to control operation. Also the cost. I make a budget that cost for each table is, for example, $9. So when we introduce these tables, the actual cost become $8. So our expectation that cost will be 9, but the actual cost for each table is 8. It is less than what we expect, which is positive difference, but also we should investigate on this difference. Even though the actual cost is less than our expectation, but we should investigate why. Maybe they use not high quality raw material, maybe. So we should investigate whether the difference is positive. All right. Also, other objective is to motivate employees toward achieving the organization goal. We will provide some tools to motivate the managers. For example, if the production line A produce more than 10,000 units for a month, we will provide some pounds to them or some remuneration to them. We should to reward them, and we should to try to motivate the managers, because we believe as a managerial accounting that once our product is high, cost will be less. Right? Also, there is some another way that we can use to motivate, just to motivate employees to achieve the organization goals. Also to measure the performance of employees, all right, or submit of the to measure the performance of the employees. So because we make a plan for everything, so the actual performance how it will be, and then we should to measure the performance of just to make a decision, because employee they respect tools, price, their salary, and so on. So this managerial accounting will help us to measure the performance of the employee. So this is about the ethical standards that we should follow. You are managerial accounting. This is ethical standards. Actually, it is used for any type. For example, for auditing, they have ethical standards. Managerial accounting. So this is normal things that we should follow, whether we are managerial accounting or not. But here, the American Institute of Management Accountants has issued these ethical standards, and they encourage the managerial accounting for these ethical standards, which is competence, confidentiality, integrity, and objectivity. So actually, we should to follow this one, whether we are managerial accounting or auditing or any work that we do, we should have these ethical standards. So here is more information about each standard, like competence. We should to follow applicable standards, or we should to follow some tools in managerial accounting that will help us to provide information that can help managers to make a decision. Or if there is some instruction, we should follow those instructions. Maintain professional competence, which is very, very important here. So we should try to have professional competence. We should to improve ourselves. We should to know or learn about some new tool that coming in the future, or because you know that technology now are being used, which can help managers, help managerial account to provide a quick and correct report. So we should to maintain professional competence. We should to prepare complete and clear report. Once manager wants us to provide a report, for example, the manager receive offer from new customer, he want to make a decision. He asks us as a managerial accounting to provide a report about this offer. To advise the managers, we should to prepare a complete and clear reports after we review all relevant information related to this order. We use some tools. We deeply analyze all information related to this order to make accurate decision or correct decision to the to their correct report, to give a correct advice to the right. So here also confidentiality is very important, that we should to not disclose information related to this company to other company. Maybe I am a managerial accountant in this company. I should to not disclose this information to the competitor, because maybe I have another friend, he works in another organization in the same industry. So maybe there is some customers that create a lot of profit to my company. I cannot disclose all this information to third party, to another organization with the same industry. So confidential information should not be disclosed unless is required by the law. Or if I observe that this my organization does something wrong against the community, against the government, I can hear or I can disclose this information to the government. But otherwise, I never ever disclose any information regarding this company to another party, whether to another competitor, with friends or anybody. I should not disclose all information to other party. All right. So confidential information should not be used, and this is very important. Information of this organization that I'm working on should not be used for personal purpose, or I cannot use this information to create a personal interest. Maybe I have a friend, and this friend he have another company, and I have some shares in this company. So I disclose information of my company that I'm on to another company that I have shares. I have number of shares from that company. So I disclose some information to increase the profit of other company that I have some shares on that company. So I will get interest benefit, or maybe so there is some way, or maybe I collect some information of this company that I'm working on. I open another company, so I take the customer from this company to my company. So all these things is not correct, and we should not disclose all information of the company that we are working on in terms of getting some interest allowed, and confidential information should not be disclosed by assistants managerial account. Right? So here, integrity also it is very important. We should avoid any activities that affect the performance and interest of the organization. Not accept gift, not avoid activities that may affect my professionalizing. So maybe there is some activity will affect my professional or will affect my independence. So to avoid this, I cannot go with, I should not attend the activities related to the customer because this will affect my attitude, it will affect my independence, and this customer maybe when they order something that I will not be independent or some other things. So communicating both variable, verbal and verbal information. All right. So this is objectivity, communicate information and fairly, and disclose of all information that is useful to the. So this is the function of the management. As we have said, the topic of this session is managerial accounting, making a decision. We have provided you some information about managerial accounting, and now we will go to another party, which is decision making. Actually, this decision making and planning, the second part of our topic for today, is related to function of the management. It's one of the function of the management, which is making a decision and making a plan. So plan, our session topic for today is managerial accounting for decision making and planning. So decision making and plan is one type of managerial management. As you can see here, we have here planning and decision making also involved in this because we make a plan to open a new branch. So this is one type of decision that we have that we should new branch and so on. So this is the important function of the. If you are a manager in an organization, you should be familiar. You should have experience on all this planning and organizing and directing the organization activities, evaluating and oversee the activity, controlling the activity. So all these functions related to that, right? So here there is some little more information about each one of these. For example, regarding to planning, we should to determine a viable alternative. We should list the alternative that achieves objective of the price of the organization. We should develop a budget that ensure development in the alternative that was chosen. So one type of planning is about project. So actually, this is very, very important for managerial accounting that we should prepare a budget for the organization. We have several departments in the organization, sales department, we have production department, we have purchase department, and so on. So we should to prepare a complete budget for each department, and it should be connected with each other. So, for example, I cannot make a product budget without knowing what is the sales budget, how much our budget for sales for the next year. So based on that, I will prepare production budget. Also, raw material, I cannot prepare raw material budget before I know how much the sales budget, how much the production budget. So now I should prepare raw material budget based on the other budget. So it is linked with each other. So this planning is one function of the managers of the organization, and this is organizing, directing, and allocate resource. So also this is you, if you are a manager, sorry, if you are a manager, you should have experience on how you organizing, how you directing, how you allocate resource, how you will deal with daily activities in the organization, right? And this one is related to control, how we can evaluate the performance, evaluate the operation, how we can control the actual performance. We should compare the actual performance with the plan one, and we should see the difference, how we can investigate on this difference in order to avoid this problem in the future. So the oversight function seeks to make sure that plans are being followed by employees and achieved, right? Feedback in the form of performance reports that compare actual performance with the planned performance. We should, as managers, to see the actual performance and compare it with the plan. We plan to sell 10,000 tables. The actual sales is 9,000 tables. So there is a difference 1,000. Why we don't achieve our plan? Why we don't sell 10,000 units? Why the actual sales is only 9,000 units? So maybe the marketing department or sales department, they don't do their work. Maybe there is some other, maybe the customer are not more interested in our production, which is a very important problem. We should to evaluate, we should investigate, we should to do a correction decision that can help us to achieve our plan in the future, right? So in the next year, we will prepare a good budget and we inshallah will achieve this based on the situation that we have made on this year, right? This is the control cycle. Control, you should know what was your plan, implementation of this plan, how is the actual performance, and then we will compare the actual performance, this one, with our plan to see if there is a difference, and then we will make a decision that help us to avoid these problems in the future. So it is related to decision. And decision making is involved in each activity in the organization. Also, there is some other decision, we will introduce it in the coming slides. All right, so now we understand some information about managerial activity. We understand the management function, which is one of it is planning and making a decision. Now we should know what is the role. What is the role? So actually, this is the managerial accountant. He said, "I'm here," and he wants to explain the management accountants. But it's actually, he said, accountants helps in gather or collecting the information and analyze this relevant information to, to, compare between alternative option, right? For example, we have two options. So we want to make a decision for which one we will select. So management accountant or managerial accountant in this application, sorry, management accounting or managerial accountant in this will help you to collect all relevant information to this alternative choice, and then they will do some analyze, and then they will provide you with a report how it will be if we select this option, how it will be if we select this option. So they will provide you advice which one is the best. So managerial accountants also helps with follow up, with compare the actual performance with the plan to see if there is a difference to control, and also it will give you a feedback regarding to the difference between actual performance and plan one. That will help management to avoid this problem in the future, and to correct their decision. If they make a wrong decision and we observe that these decisions are not correct after we working on, so we can provide advice to the managers to make another decision that to correct this. Also, management accounting will help management adjust correct current adjust current operation if the actual result of this decision are markedly different from those anticipated, right? So now we will focus more about decision making, and we have some exercise at the end of this PowerPoint on some type of decision. So what is the definition of decision making? Actually, decision making is the process of making choice by identifying a decision, gathering information, and assessing alternative. And there is another decision also provided by this author, which is decision making involves the selection of a course of action from among two or more possible alternatives. We have several alternatives, so we will gather information, collect information, we will analyze this information, then we will select the best alternative, right, that will help us to achieve our objective. So there is two or maybe sometimes more than two possible alternatives. So we have to select one. We have to arrive at a solution for a given problem. So we will select the best alternative among those possible alternatives. Right? So now is the most important is how do managers make such action? Not easy work for them. Managers, when they make a decision, they have to collect all information. They have to make a good decision. Otherwise, they will give, the organization will face a problem. So it is very, very important for the managers to have experience, to have a good managerial accountant, to have a good accounting. So if the managerial accounting, if the managers don't have good accountants, you will make fun. The success of managers is depend on the accounting, right? For example, we have two production lines. One production give us loss, one production line give us a loss, one production line give us a profit. So the managers see that why we not close this production line that's give us a loss. So maybe we have one accountant, managerial accountant, he advise him. But other managerial accounting, he don't advise to cross this production line that give us a loss. Why? Because this production line, even though it give us a loss, but it contribute to cover fixed cost. So in some situation, some decision maybe are not correct. When you see it from outside, all right, we have two production line. This one give us loss. This one give us profit. So okay, we will close that one which give us loss. But in the reality, this production line actually, yes, give us a loss, but it contributes us in covering the fixed cost, which is if you close this production line, fixed cost will not be eliminated by closing this production line. So there is some decision if the managerial accounting, they don't have experience, they don't deeply analyze these situations, maybe they will give wrong information. So the managers rely on the report given by the managerial accountant, and then manager will make a wrong decision that will affect the organization, will affect the performance of the organization, and at the end, this organization will face a problem. So actually, I'm saying that success of managers actually depend on the accounting, depend on the managerial accounting, right? So you are the most important element of the success of the managers in any organization, right? So how do managers make a decision? First of all, we should know what is the business strategy, what is the business goals, what is our objective. Actually, we consider this one as a guideline for us. So then we identify alternative courses of action. So now we should understand what is the business goals, and we should know what is the alternative solution we have, what is the alternative option we have. Now maybe one or two or more than two, maybe three, four, five. So we have all these alternative shot to gather or collect all information regarding to all these alternative options. Then we have to analyze those information and compare between this option, this option, this option, this option, and then we, after we compare all those options, alternative options, so then uh, absolutely we will select the best alternative amongst options, right? So and then we will implement this option, and then we will follow up with the implementation of this option. Then we will see how is the performance. If it's okay, good. So we will strengthen it more. If it's good, we will try to improve it. So if there is the performance is not, it's not good, so now we should make something, right? So this is the this explain how managers make a decisions. So we should follow these steps, right? For any decision we make, we should consider the objective of the organization. We should know what is the alternative options we have. We should select or collect all information related to this alternative option, analyze them, and compare the performance in each of these alternative options, and then select the best, and then we will see the actual performance. It is okay, and then we will fully implement this decision. We will try to strengthen the performance of this option. Otherwise, if it is not, the performance is not acceptable, we try to revise or change our decision. All right. So this is when we want to make a short-term solution decision, we should consider some elements, which is we should focus on relevant revenue, cost, and profit. For example, if you want, okay, there is a lot of decision that we should focus on relevant revenue, cost, and profit, right? For example, last year, I we produced, for example, 10,000 tables, but the profit we got last year is less, not so much. So now we want to make a decision to increase our sales from 10,000 to 20,000. So we should know how much the profit will be, how much the cost, how much the profit, whether we can sell all this product or not, and so on. And also, managers, he want to achieve a target profit. So we should advise the managers how many units we should produce in order to achieve a target profit. If you remember big events, so there is one equation that we use to tell the managers if you want to achieve this profit, $100,000 profit, you should reduce this number of units by using the equation fixed cost plus target profit divided by contribution margin period. So actually, when we want to make a decision, we should focus on relevant. What's mean of relevant? There is, for example, we have two options, option A, option B. For example, the cost of one item is similar between these two alternative choices. That means this item is not relevant to make a decision. It will not help us to make a decision because the cost is the same. So relevant revenue, relevant cost, and profits mean that we should focus on the information that are different between the alternative option to make a decision. For example, if there is two options are the same in the cost, so there is no relevant information that I can use to see, okay, you select option because the cost is the same. So, or when I analyze or two options, there is several items, so I will exclude the items that are similar in these two options. I will focus on the information that is different in these two options and that can help me to make a decision. So this is the definition of relevant. Relevant information, for example, relevant costs, that means the costs that are different in this two options. I should start this. Any items that are similar between two options, that means this information are irrelevant, are not relevant, are not will not help us to make a decision, right? Also, we can use contribution margin approach to help us to make a decision for some things. For example, if you want to continue with line or close this production line margin, if you want to know how much units I should produce in order to achieve a target profit before tax or after tax, I should consider contribution margin approach. So there is a lot of techniques that we can use in order to help us to provide a report to the managers in order to help them to add decision. All right. So now we will go to the empirical side of this PowerPoint. There is some example of short-term decision. I'm not sure, Miss Maya, May Hannah, if we can make, if the students want to make sometimes.
Yes, sir.
Yeah, I want to ask you whether you want us to stop for 15 minutes or can continue. I'm not sure about the students. So we should to continue or we should to stop for 10 minutes.
We can continue, sir.
Yeah,
Or
so, all right.
while waiting, I will open the discussion session or Q&A session. It's okay. Okay, for all participants, we still wait a minute. Okay, please, sir. You
Yes.
can still
Continue. All right.
yeah, continue.
All right. So here is some examples of short-term exception. So we actually face, and if you are working in an organization, you will be here. We use some example of short-term exception. For example, special sales orders. This is happen in manufacturing company or any other company. So there is a customer, for example, we are in Indonesia. There is one customer from outside Indonesia. They want to purchase a high number of, right? Or maybe sometimes in the same country, but in another city, right? So special sales orders, and this is type of decision that we can face. We will see some exercise regarding to this decision and how you can analyze the data and how you can help the managers to make a decision. Another decision is discontinue products or department or stores. We have one department, for example, in Gulf University, in administrative science and administrative and financial science college, we have two departments, which is human resource and accounting and finance. Human resource, they have a high number of students, but in accounting department, we have less number of students. So sometimes managers decide why we pay a lot of cost for this department and cost. So why we cannot close? And the same it happened in the organization. If you have several or for example 5 production line, four production line is okay, they create a profit, and one of it gives us a loss. So when you see this loss, immediately the managers don't like to see loss or any production. So he thinking about loss this production line, don't have more experience in information related to cost and so on. So he don't consider fixed costs. So he will come to you, he will ask you, oh, Mr. Muhammad, we have this production line, it gives us loss. Why we not close it? So you will provide a report, show the managers, yes, this production line give us a loss, but it contribute to fixed cost. You will tell him if we close this production line, the fixed cost it will not be eliminated, will not be reduced. Fixed cost in total will be the same whether we have 4 line, 5 line, or 1,000 line. Fixed cost in general in total is the fixed. If you close this line, production line, you will not eliminate, you will not reduce the fixed cost. you will still should to pay this cost. So sometimes some production line it give us loss, but it help us, it contribute to the fixed cost, right? So also we have outsourcing. Sometimes you see the laptop manufacturing, maybe they produce all items of the laptop, but motherboard they bring it from China. All right. So why we not reduce motherboard in our manufacturing? So some organization they produce some product and some of this item used in this product it purchased from outside the manufacturer, right? So here we decide, or in some other situation, they reduce everything in their manufacturing, but one item of this is costly and they don't like to do it in their organization. They said, why we not export it from outside instead of introduce this item in our organization, right? So here, this is another decision, outsourcing. We make the motherboard in our organization or we purchase from China. We have manufacturer company, we produce laptop, and we do everything in our organization, but making the motherboard is costly here in our organization. We say why we don't bring it from China. It will be cheaper and it will make our work easy. All right. So we will see some exercise regarding to this decision, and there is a lot of decision, but this is for short-term decision. We have put some others here, so we will focus on these three because of the time. Right. So now we will see the special sales order. So sometimes we receive order from the customer. We want to decide whether to accept this order or reject this order. So what's mean by a special order? Special order actually it happens from some customer for one time or two times and so on. So actually we sell our product in Indonesia, in this city, for example, X city. So there is one customer from another city of Indonesia. They want to review, they want to purchase a lot, a high number of, for example, 20,000 units. He will purchase this one, but there is some specific things in this special order. Actually, they pay less than our normal price, right? So the price they give us is less than normal price of our product in X, right? So now in some situation we have to reject this order or we have to accept this order, right? So here after this slide we have exercise. So the most important to think about this order is to ask yourself about this. Do we have enough capacity to do this order or this is the most important? So before, for example, I have a manufacturer in Indonesia in X city. I produce a tables. So the capacity of production is 100,000. But what I produce now currently is only 20,000 because the customer I can only sell tables. So there is one customer in another city, for example, Z city. They want to purchase 10,000 tables, but the price is less. So as well as I have capacity, so I can think about this order, as well as the sales that will be sales price will be paid by the customer at least should be higher than the variable cost, right? So then I will think about this further. So I'm not sure if you can see this exercise. This is one exercise. We will try to see how we can make a decision regarding to this exercise. So table below shows a contribution margin income statement for the current value of oil filters sold to 150,000 euros. So we have a manager. I'm a managerial accountant in this organization. The the current production is 250,000 units. We produce these units, right? So this is the information related to production of 250,000 units of oil filter, right? So sales price for each unit here, oil filters, is $3.2. And to produce any product, you have to pay for variable cost, you have to pay for fixed cost. I'm not sure if you're familiar with variable cost and fixed cost. Variable cost is the cost that we will pay to produce any units, and this cost is يعني, for example, if I want to produce table, I need to pay for wood. Wood is a variable cost because the cost of this item is considered high related to the cost of the table. So variable cost in total will be changed based on the change in the number of production. So variable cost is the cost that are more related to the product. We can see it. You see the table. If you want to produce the table, there is a wood that will be used in this section. So you can see it clearly. Cost of wood is high, so they consider it as a variable cost. But for fixed cost, which is in general total, not changed by the production. If you produce, for example, 1,000 units, you will pay the same fixed cost. For example, we have rent, we have insurance, we have administrative salary. All these costs is fixed cost because it is fixed. It will not be changed whether you produce 0 units, whether you produce 1,000 units, whether you produce 10,000 units. You cannot go to the owner of the building and ask him, oh, this don't produce high number of units, please reduce the rent. So fixed costs in general will not be changed based on the change or based on the change of space. This is why they call it fixed. Fixed cost in general will not be changed based on direction. But maybe after you the capacity, for example, يعني, if the capacity, for example, our capacity is 100,000, so fixed cost will not be changed based on this level. But if you want to produce more than the capacity, you should have another building, you should have another machine, and in this situation, fixed cost will be changed, right? But in the same level, the same capacity, fixed cost will not be changed. An example of fixed cost is like electricity, rent, and so on. This is just a brief explanation about what is variable cost, what is fixed cost. So let's go back to our exercise. So this is the table explain the contribution margin of number of units produced by this organization, which is 250,000 units, which is oil filter. All right. So sales price for each unit is $3.2. That's mean we produce and sell 250,000 filter multiplied by 3.2. Total revenue will be definitely 800,000. Right? So then, as I have said, something you should pay for variable cost. So here, variable cost, we have two types of variable costs. Here, variable cost related to manufacturing, manufacturing cost, all costs paid in the production line, the production, right? And we have here variable operating expenses, which is selling and administrative. So for the first one, variable manufacturing cost is 1.2 for each unit. Definitely it will be 300,000 or in total. That's mean 1.2 multiplied by 250,000. So total cost will be 300,000. Regarding to the variable operating expenses, administrative department is 0.3. Definitely will be 75,000 for uh, for all units, because 0.3 multiplied by 250,000 units, that's total amount of this variable operating cost will be 75,000. So now we know how much the variable cost we have paid. In total, variable cost in total is 300,000 plus 75,000. So total is 375,000. If you deduct it from the sales revenue is 800,000. That's mean contribution margin is 425. What's the meaning of contribution margin? Contribution margin is the remaining amount after we deduct the variable cost, right? So revenue in total is 800,000 minus variable cost in total is 375,000. So contribution margin is 425,000. The remaining amount after we deduct the variable cost, the remaining amount that will contribute to the organization to to cover the fixed cost and to contribute in the profit of the organization. So this contribution margin mean the profit, not the profit, is the remaining amount that will contribute to our fixed cost and help us to get a profit. So after we calculate contribution margin, so there is fixed cost that we should pay. So for example, fixed cost related to manufacturing overhead is 200,000, and there is fixed cost related to operating expenses of selling and department is 105,000. So that's mean contribution margin it was 425,000 minus total fixed cost 325,000. So our operating income is 100,000. This is just to explain to you if you maybe some you have not taken cost accounting, accounting. So this is the exercise. They provide to us this information, which is related to the production of the organization. We produce and sell 400,000, and this is the information regarding the sales new operating income for the current production, right? So operating income here is 100,000. Variable cost per unit is 1.20 for manufacturing cost and 0.3 for the operating expenses to selling, and there is fixed cost which is 325. This is the question of the exercise. So here there is additional information provided to you here. So this organization produce and sell 150,000 units. This is the current situation, and this is the contribution margin or the income of this situation. So here, assume that there is another company, right? They they over our company. This is our company. This is our company. There is another company. They want to purchase 20,000 oil filters. Right? This company want to purchase 20,000 oil filters from our company. Right? So, but if you see the price, how much amount they will be to us is see our normal sales price in the question is 3.2, right? While this organization, mail order company, they will pay to us only 1.75. They said we will purchase 20,000 units, 20,000 oil filters, and we will pay only 1.75 for each. That's mean total amount we will pay is only $35,000, right? So immediately the managers they said how I can sell to them one unit, one filter, oil filter for 1.75 and the normal price 3.2 is impossible. This is why I said that there is some techniques we should to have experience. We should to try to change the opinion of the managers. We should to provide a complete report to the managers. Please wait. We will provide a report. We will make analyze and we will provide you an evidence about this order. You can see here the normal price is 3.2. This crazy company, they want to pay to us only 1.5, 1.5. So much, right? So if we don't have experience, we will say no, immediately reject this order. Normal price is 3.2. We cannot sell. We cannot produce 20,000 oil filter and sell to this company for 1.7, right? From here, we will observe the importance of accounting. The success of managers depends on you working as an accountant, as an accountant. Right? So here some other information. Our company has the capacity to produce order. We have capacity, right? Also, our fixed cost, right? Because we will pay the same amount of rent, we will pay the same amount of answering departments, we will pay the same amount. So fixed cost of our organization will not be changed. That's it. This order, right? Here is some other information. Reducing over will not bear any variable selling or administrative expenses. If you go to the table here, we have variable operating expenses, selling and administrative, as well as this order. This company wants to reduce a high number, want to purchase a high number of units. We will not pay selling and administrative cost for only this order. For the order we want, for the order of the company, for this order 20,000 oil filter, we will not pay selling and administrative expenses only for this order. That's mean if we accept this order, we only will pay for variable manufacturing cost, right? So here the over, this is also the most important point. If you are a manager or real accountant, should you consider this information? Should think about the order. This order, if I accept this order and I sell this product to this customer, does this order will affect my regular sales or not? Which mean that you can see here to the exercise, our normal sales for one unit is 3.2, right? Maybe this customer, he wants a high number of units and he will pay to us only sales price only 1.5. Maybe he will purchase these units and then he will come back to sell our units in our market by less price than us. Maybe this customer he will purchase from us for 1.575. Maybe later on he will come in the same our market and he will sell it for maybe 2.75. It will affect our sales. So we should be sure that these customers are outside of Indonesia or maybe in other city, and maybe uh, we should be sure that he will not sell this product with less than our price, our normal price, right? So now, if I am a managerial accountant with less experience, I will say no, should accept this order because our sales normal sales is still going to, but this customer will be so much less than our normal price on orders, right? Also, the cost of each unit you see here, this is variable cost, and here we have fixed cost. If you divide this total fixed cost, 200,000, 125,000, 325,000, if you divide it by 250,000 units, you get here fixed cost in unit plus variable cost in unit. So cost will be higher than the sales given by the customer. So if I don't have more experience in year accounting, I will tell that this our company should not accept this order. But if I got managerial accounting, I collect information, I analyze the information, I then I prepare a correct report so I can get another view than than other managers can experience. Right? So now let us see the correct answer about this one. Actually, as I have said at the beginning, if you receive any offer, you should to consider only variable cost. Right? At the beginning, you should consider variable cost per unit. See here, you will pay $1.75 for each unit. Variable cost here. Variable cost is 1.7 less. That's mean sales price given by the customer is higher than variable cost. That's mean we should accept that. But we will go further with more. At, at least sales price given by the customer at least should cover the variable cost. And here in this exercise, for this order, we will not pay the variable cost related to selling and administrative department. So here, first of all, we should do compare between sales price and the variable cost per one unit. If the sales given by the customer sales price is higher than variable cost, the speed we should go further for more information. And from this overview, we observe that we should accept this order, but we will go with more information. Okay, so if now, okay, sales price per unit is higher than variable cost, to make a decision, you should use the variable cost because the remaining amount will help you cover fixed cost. So if you accept this order, you will cover variable cost and the remaining will help you to reduce fixed cost per one unit for each one unit. To reduce the cost or to cover the cost fixed cost, right? So now we should to see what is the benefit we will get if we accept this order and what is the cost. All right. So if we accept this order, that means our revenue will increase by here. We will sell 1,000 unit for oil filter. Multiplied by sales price one filter is 1.75. That means total revenue will be 35,000, right? So we will have additional revenue 35,000. This is the benefit that we will receive from this order if we accept. Let's go. Let's go now to the expenses. What the cost that we will pay if we accept this order. To produce these filters or these units, we have to pay variable expenses. Here we have two types of variable cost. The first one is okay, we should pay. For the second one, for only this order, we no need to pay any cost related to selling and administrative because only we will produce this unit, we will give it to the customer, right? So regarding to the variable cost, we will pay only for the first type of cost, for the manufacturing cost. For the second one, we will not pay because this customer, he will sell this product in his own shop. Just we will produce and give it, right? And it is mentioned here in the exercise that fixed cost that producing over will not require any variable selling and administrative expenses. You accept this order, no need to spend any amount for selling and administrative expenses because just you will produce and give it to the customer, right? So that's mean the cost that I should to pay if I accept this order is only 1.2 for each filter. So that's mean total cost that I will pay, total variable cost I will pay if I accept this order, 1.2 multiplied by number of units that I will use for this order, 8,000. So 20,000 multiplied by 1.2 will be 24,000, right? So if I accept this order, I will get additional revenue. Revenue from this special offer will be 35,000. This is the revenue I will receive, and I should to pay expenses to produce this special order, which is 1.2 here for each filter. Total amount that I will pay is 24,000. This is the variable cost that I should pay in order to Right? So now, which one is higher? Regarding to fixed cost, it is mentioned in the question, fixed cost will not be changed. This all amount of fixed cost for only this order, I will not pay any additional fixed cost because I have the capacity. I can reduce this over in my organization. No need to rent a new building, no need to bring a machine and so on. We have capacity, and it is mentioned in this exercise that actually we have capacity and fixed cost will not be changed. We already have all the elements, so we have capacity, so there will be no any additional fixed cost for this special order. So now to compare between revenue, how much the benefit we will get if we accept this order, our revenue will be increased by 35,000. How much cost we will pay for this order to reduce 20,000 units for this order, we have to pay 1.2, so total amount. So if you can see here, fixed cost is zero, right? Fixed cost is zero. So that's mean the revenue that we will receive is higher than the expenses. That's mean we should accept this order because this is total revenue 35,000 minus variable cost 24,000. We have a contribution margin for this order 11,000 and there is no any fixed cost. So there is an increase in operating income for special order by 11,000. If we accept this order, our income, our operating income will be increased by 11,000. So you can see the difference from the previous managerial accountant who don't have experience and now managerial accountant who have an experience. How is the decision is different? The previous one who don't have experience, he said, no, we should not accept. We should not accept this offer because price is less than our normal price. Cost for each filter in journal is higher. He said variable cost for each filter is 1.7. Here we have fixed cost. If we divide this total fixed cost by number of units, so here we have also fixed cost for each filter. This plus this, it will be higher than the sales given by the customer. This is the previous managerial account. But the other managerial account, he said, no, I have an experience. I can provide you a report. He provided this report to the managers with evidence, with a correct report, a complete report. So now the managers believe on this one because you provide to us evidence. Yes, it's correct. All right. If we accept this order, yes, our operating income will increase by 11,000. Why it is increased by 11,000? Because this order, yes, the sales price is less than normal price, but this special order help us to reduce the fixed cost per one filter. Because now we will produce more units. We will produce more units, so fixed cost will be reduced. So now, based on this report, our revenue, additional revenue will be 50,000 and cost will be 1,000. So our benefit, our revenue is higher than expenses. There will be an increase in income, in operating income in 1,000. That's me. We should to accept this order. There is another way to analyze this exercise, and to make a report, which then we can also use another way. We can see, we can prepare another table, one column for operating income if we not accept, and another column for operating income if we accept, and we will see how much the operating income. So there is different ways that you can use to help the managers to make a decision, but in this two way, the answer will be the same. There will be an increase in operating income element. Either we use this way or another way. So there will be an increase on operating. So this is the most important because it will be faced by all organizations, not only for this decision. You know, يعني, there is, for example, it's very important. For example, I have a company and I have one unit. The sales price for this unit is high. So, and there is a competitor. For example, I produce, for example, a table. So I sell this table by $20, but there is some other competitor. They have less price. So some managers, they don't like to reduce the sales price. They think that if I reduce sales price, my profit will be less. They think like this, but if you reduce the sales price, you will increase the sales units. Once you increase the sales unit, the cost for each unit will be reduced and your profit will be higher than you keep the price high, right? So there is, especially when you face a problem, some company, they face a problem with some product and they don't like to reduce the price of this product. They face a problem to reduce the cost. So there is no issue about the sales price unless you control the cost and you be able to sell more units. If you sell more units, the cost per one unit will be right. So here is also another exercise, which is actually the same like the previous one we explained. Just we will review it quickly. Assume that a company, assume that a company, there is a company is running at 90% of its monthly capacity. This company has just received a special order to produce 40,000 cases of chicken noodle soap for a national market. The supermarket will sell the soup under its own private brand. So the soup will be the same in all respect, except for the label, which will cost this company, our company, or an external 5,000 in total to design this. The supermarket has over to pay only $19 per onion, which is well under our company sales price. Cost at the current production level are as so we have, this is our company, else soup plant. This is our company. So we still have capacity. So we are working under the 90% of our capacity. So we receive an order from a customer, 40,000 cases. There is one customer, he wants us to sell them 40,000 cases. So here the information, the variable cost is the variable cost. So this is the information regarding to our current situation. Our current situation. We produce currently 450,000 cases or units. So variable cost, we have direct material, direct labor, and variable MOH, manufacturing overhead cost. And we have fixed here, fixed cost. So if you can see, total amount of variable cost is 10.32. Variable cost is $15. Total amount of variable cost is $15, and there is fixed cost is this is for 1 unit, right? So now the customer, he wants to purchase 40,000 pieces, but the price he will give us. What is the requirement? Is there enough capacity to reduce this order? And whether you, as a managerial accountant in this company, advise the company to accept or either this order will increase our profit or not, uh, whether we accept it. So if I'm not have an experience, immediately I will say, okay, cost per cases. Each unit will cost me in total variable cost and fixed cost total is $10.36 is 21. Right? If I don't have experience, I said, oh, how it can be the cost for each unit is 21. How this crazy company, crazy customer, he wants to pay to us only 19, right? And maybe it is not mentioned here the normal price of our company. Maybe my price is more. So if I don't have experience, I will say, no, we cannot say 1 unit it cost us 2. How it will be $19? So this is the most problem that is right in the organization, right? So, but another managerial accountant who have experience said, no, no, we should consider only variable cost. So variable cost for 1 unit is $15. We should consider variable cost. So variable cost is 15. Customer will pay to us 19. That means we will at least cover variable cost, and the remaining amount for BD will help us to reduce fixed cost, to contribute to our fixed cost, right? So now this an expert managerial accounting, he has another overview. Said no, we should accept this order as well as the sales price $19 will cover at least variable cost, right? Let's see now how this managerial accountant he will provide us a report. He will say, okay, there is, as I told you, there is two ways. One way is to prepare operating income in the current position and operating income on the if we accept the order, how much our income will be. So in total for our normal product and overall. So and there is another way just to focus on the benefit and cost, and the answer will be the same, right? So this managerial accountant, he said, if we accept this order, our sales will increase by, see here, we will sell 40,000 pieces. Customer, he will pay 19. So 40,000 multiplied by 19, our sales will increase by 760,000. So here is the increase in the revenue. If we accept this order, there will be an increase in the revenue by 760,000, which is sales price given by the customer is 19, multiplied by the number of units we will produce for this order, which is 40,000. right? So now our revenue will increase by this. So this is the benefit model. How about the cost? Definitely, if we will sell these units to the customer, we have to pay variable cost and fixed cost for this special order maybe will not be valid because we have capacity. We have capacity. That's normally we will not pay for fixed cost because we have capacity. Unless there is some other information provided. Like this exercise, they mentioned that this customer wants our company to design the label for this product. So just we will pay only 5,000 to design this label. That's mean the cost that we will pay to accept to produce this order. This we will produce 40,000 units. Variable cost is 15. Variable cost is 15. So $15 multiplied by 40,000 cases, 15 multiplied by 40,000 cases, we should pay for variable cost 600,000, right? Now, contribution margin, which is sales minus variable cost, contribution margin will be 160,000, right? This is the operating income before fixed cost, right? So regarding to the fixed cost, you will not pay 650 like as it is mentioned. Here, fixed cost 650 for each unit. We will not pay because, as I have said, we have capacity and we will not rent new building. We will not have a new machine. We will not pay insurance and so on. So we have capacity. Just we will pay here 5,000 for designing the label. So we will pay extra fixed cost here 5,000 for designing the label for this product that we will produce and sell to this new customer. So that's mean operating income will increase by 155,000 if we accept this, right? So in conclusion, our revenue will be increased by 760,000. We should pay expenses 600,000 for variable cost and 5,000 for the fixed cost. So total expenses that we should pay 605, as well as the revenue is higher than expenses. That's mean we have to accept this order as well as this order will increase the operating income of our organization by 155. This is enough exercise that will show you how we make a decision regarding to special order, and also we can apply this situation for any company they face problem with any type of product. For example, they have loss in this product. You should consider that if they reduce the sales, maybe the sales unit will be increased, so production will be increased, cost will be less, so they will get more profit. And if you make sales price $20 for your product and you sell only 1,000, and if you expect that if you reduce the price to 16, maybe you will produce more than that. Maybe you will produce 20,000 units and you will sell 20,000. So if the reduced price will increase the production units and you are sure that it will be sold, you can sell these units. It's better for you to do that if it will affect your market. Because some customer will think that If we reduce the price, maybe that's mean our product is high quality and so on. So we try to manage it with acceptable. So here there is some other decision regarding to decide whether to discontinue a product or department or continue with that. Sometimes we have three production line, two get profit and one get loss, like in this exercise. So we have here exercise. You can see uh, I'm not sure if the table is clear or not. All right. So if you can see this table,
Yes,
we
sir.
have,
You can
yes,
see.
clear. All right.
It's clear.
So
It's clear.
all right. So we have these two production line. First one, it gives us very nice profit, which is 165,000. But the other product line gives us a loss. This is the operating income. First product gives us profit 165,000. The second one, it gives us loss. Immediately, the managers who have experience accounting or especially in accounting, he will say, why we continue this time, why we not close it and save this cost. He may be think that because this is the total operating, this is the total operating income. Uh, Here we have profit 165,000. Of course, here second line 15,000. So that's mean total operating income will be 150,000. Managers think that why we continue with this production line and it will reduce our profit. If we close this production line, our, our total profit will be 165,000. Why we continue with this second production line and it gives us a loss 15,000. So our total operating income now will be only 150,000 because we get profit in the first production line 165,000, but in the second one we get a loss 1,000. So now our total operating income is only 150,000. Think that if we close this one, our total operating income will be 165. You don't consider the fixed cost. You think that if we close this second production line, we will eliminate, we will save, we will reduce all costs. If you think that we will not pay for the variable cost, we will not pay for the fixed cost, which is, as an accountant, even we close second production line that gives us a loss. Yes, we will save the variable cost, we will not pay the variable cost, but for the fixed cost, we have to pay. We cannot avoid fixed cost for the second production line, which is air cleaners, even though we close this line. So there are some questions managers must consider when deciding whether to discontinue line or department or store. So does the product provide a positive contribution margin before you think about closing any production line? You should see how about contribution. The most important of this production line is that he this production line at least should cover the variable cost. If it is positive contribution margin, what's mean by positive contribution? It means that this production line that give us a loss, we should to see the revenue. See this one. The second column for the air cleaners, which give us a loss 15,000. We should to think about the revenue. How much the revenue of this line is 125,000. The variable cost 70 or 75,000. That's mean we have contribution margin here 50,000. Positive contribution margin means that we have remaining amount. Sales price minus contribution margin, there is a remaining amount. This is the most important because if we close this production line, we will lose and we cannot avoid fixed cost. Our loss will be higher than this one. So managers, when they think about loss in any production line or stop product, any type of production, you should to consider whether this production line or this product has a positive contribution margin or not. Whether the sales, whether the revenue at least cover variable cost. As here in our exercise, our revenue cover all variable costs, and also we have remaining amounts that it can help us to reduce the fixed cost, will help us it will contribute to the fixed cost, and it may generate up, right? So also the managers also are should to consider this question. Are there is any fixed cost that can be avoided if we close this production line? We can avoid fixed cost. Definitely, we cannot avoid fixed cost if we close the production line in total. Maybe we will avoid some amount, but you can say all fixed costs you will avoid if you close. For example, I have a manufacturer, I produce 10 products. So the building is the same, insurance is the same, salary of administrative and sales department is the same. So whether I close one, I stop one product or two, the fixed cost will be the same. So fixed cost cannot be eliminated. We cannot avoid fixed cost. Maybe a few amount that we can avoid, but if you can say all amount, it is this cost. Any production line or stop any type of product, right? So also we should consider other question. We should to ask ourselves, okay, if I close this production line, how I can use the capacity? I should to invest on these things. For example, you stop this one, you should to use the energy for something else. So do we have any things that we can do? What could we do with the feed capacity? Right? And there is a lot of questions we should ask ourselves, or we decide. So here is an exercise, as I already explained something to this exercise. So let us assume the company makes food. We have here two production line, which is the first one oil filter, and the second one is air cleaners. The first one oil filters, the first column, and the second one is air cleaners. So we have this two production line. So currently, the air cleaners, it gives us loss. So the manager thinks that without this loss, management leave the company's operating income could be 15,000 higher each period. The managers, they think that if they cross this production line, their income will be increased by 15,000 because now we have lost 15,000. So if you can see here, the last column, total operating income is 150,000 because we have a loss here. So they think that if we close the second production line, our operating income will be increased by 15,000. All right, therefore, management is considered whether to discontinue the production line. Further, management has identified 8,000 of the fixed manufacturing and 10,000 of the fixed operating expenses that can be eliminated if we close the production line of air, air cleaners, right? So they say that if we close this production line of air cleaners, we cannot eliminate all fixed costs. Just we there is a small amount that we can eliminate, avoid, which is 5,000, which is 8,000 in the fixed manufacturing cost and 10,000 in fixed operating expenses. That means if they close this one, they can avoid 8,000 from here. You can see my mouse and 10,000 from here, right? So now they want your opinion as an expert managerial accounting. Do you advise the company to discontinue the production line or not? So now they looking for your advice. So the managers, they think that, okay, if we close this one, we can not have this loss. Our operating income is safe, fixed cost 8,000 here and 10,000 here. So now they need you this. So if I don't have experience as a managerial accountant, I said I will agree with the managers. I said yes, correct. But if I have an experience, I should consider all these questions. I should consider all these. I should see the information available to me. I should analyze them. I should, first of all, I should to see, okay, you as a manager, you want to discontinue this line, all right? Let me see. So this is the information I will analyze, so and so. So I will provide a report. So first of all, you should to see the contribution margin of this production line. If it is positive, that means there is no way. If you will stop this production week, your loss will be higher than 15. Now you get 15,000 loss in this production line, which is acceptable. If you close this production line, your loss will be more than 15,000. So we should advise the managers that there is another way that we can use to increase, to avoid these losses, to increase our production, to increase our sales, to reduce the cost, but not lose this line, definitely, right? So how you will do now? First of all, you should to know if I close this production line, I will lose some revenue. And yes, I will save some cost. You should make a report like this, right? So you should make a report like this one. You should know if I close this production line, I will lose some revenue and I will save some cost. If the revenue losses is higher than saved cost, that means it is not good decision to close this See, now, if I close this production line, I will lose this contribution. I will lose this contribution. I will lose this revenue. I will save this costs. So I will lose this contribution. I close this production line. I will lose this contribution because our sales in this production line is 125,000. Variable cost is 75,000. I have here small profit, let's call it margin 50,000. If I close this production line, I will lose this contribution. So I will lose 50,000 of the right. I will lose this. But on the other side, I will save some amount of fixed cost as it is mentioned in the exercise. In the exercise, fixed manufacturing cost for this production line is 40,000. If I close it, I will avoid 8,000 only. So if I close this one, this line, I will avoid. I will save 8,000 of this amount that I will save, the cost that I will save. Regarding to fixed operating expenses, here 25,000 for cleaner production line. If I close this line, I will save a cost here 10,000, right? So if I close, I will save this amount. So now I will compare between amount that I will lose and the amount that I will save, right? If I close this production line, air cleaners line, I will lose this contribution, the operating income before tax. I will lose it. So amount that I will lose 1,000 is higher than the cost that I will save, right? So operating income loss if we close air cleaners will be 30, right? So if I close this production line, our loss higher, it will be 32,000 instead of 1,000. So no, I don't twice this to discontinue this cost this production line. This analysis showed that the company operating income would actually decrease by 32,000 if we lost this line. Therefore, air cleaners should not be discontinued, should be closed, should not be stopped. The company would only eliminate the air cleaners if it is could use the if we have if we can use the capacity of this production line to produce something else that will give us more profit until we have this contribution, I can analyze and I can make another decision. With current information, this company should not close this position. Right? So the last decision making that we will see and take as exercise is outsourcing. Outsourcing, some they call it make or pay. Should we continue to use this item that we use in laptop in our organization, or we should purchase this item from outside, from China and so on, or the opposite? if we reduce all items in our organization up to, maybe we observe that there is one item, it is costly for us, and we don't have enough expert people who can do it. So we decide to not do it in our organization. So, so this session may be happening in some organization. So outsourcing means that we stop doing this item in our organization, we bring it from outside, right? So outsourcing sessions are sometimes called make or break. Should we make it in our organization, this item, or should we pay it from outside, right? Because managers must decide with that or service in-house, inside our organization, or we should buy it or bring it from company, whether in the same location or outside our company. China. So small exercise here, remaining only 2 slides. Uh, this is exercise regarding to outsourcing. So, right? So this is an exercise regarding outsourcing. Make it or buy from outside. So let's assume that Apple I'm working on as junior accountant in this exercise. So let's assume that Apple, the developer of iPads, is deciding whether to continue making the earbuds, this one, right? Uh, that are sold with the product or just bring it from outside or outsource production to another company. So my company that I'm working on as a manager accountant, they reduce the Airbus in their organization, but now they want thinking that why we not ask this company to reduce the Airbus for us. So a company that is specialized, this company is more specialized in Airbus, right? So why we continue doing this Airbus in our organization? Why we not ask this organization to do that skill candy? Meaning, so the idea is that Apple, they decide now or they're thinking that why we not ask another company to use the Airbus for us. Let us assume Apple's cost will reduce million Airbus each period is as shown in the table. This table shows us the cost of producing Airbus in our company, which is Apple. Apple, right? Apple. All right. So this is the cost. So further, let's assume that Apple could save $500,000 of fixed cost each period by outsourcing. See this one. Let me increase the table. If you can see here, Apple, they use AirBuds in their organization. They do direct material, direct labor, variable option overhead cost for each for each AirBuds is $4 material. This is the total cost. Direct labor is 5 cost, and this is the variable manufacturing overhead. So total variable manufacturing cost is 12, and variable cost for one unit is 60. This information based on production of 1,000 units, right? So $6 for each AirBuds multiplied by 2 million AirBuds. Variable total variable cost will be, and there is another fixed cost which is fixed cost, as it is mentioned here, to produce 2 million units is 4 million. What's mean that? It's mean we, this company, pay total variable cost and total fixed cost 4 million. So total cost, variable and fixed, total cost is million. It is 60 million in order to produce 2 million AirBuds. If you divide 16 million divided by 2,000 units of AirBuds, total cost for each one is $8. So what is the calculation for this table? From this table provided to you is that variable cost for one unit, one AirBuds is 6 million, but total cost for each unit is 8. That's mean $6 variable cost for each unit, and $2 is fixed cost for each. Right? That means its total amount is $8 cost for one AirBuds. So let's further assume that this company that we will ask her to use this AirBuds instead of doing it in our organization. This company is willing to provide us with AirBuds for only $7 each. That means that now we have two options. Whether we continue to use AirBuds in our organization and the total cost for each is $8, or just we take it from another company who have more experience, who have more specialized in doing this type of product, AirBuds, and we will be only safer. So our company, managerial accountant, I assume that I am a managerial accountant in Apple, right? Should Apple company make the AirBuds or just by name and this? So when you see this information and without any thinking or without any experience in management accounting, the thing that I will observe that, okay, if we continue to produce this product in our organization, it will cost us $8. Why we not save our money? Why we not bring it from outside and it will cost us $7? It is less than cost that we spend to reduce organization, but some they ignore this cost, which is the point. We, as managerial accounting, should consider that fixed cost. If you purchase it from outside, from another organization with the less amount, that's mean that's mean yes, it is less by $1, but if you do that, there is a fixed cost which is 4 million that you will not be that it will not be right. Yes, the sales price is less if you take it outside by $1, but there is a fixed cost 4 million that you will not be able. It is mentioned in the question that we can avoid $500,000. That's mean this 4 million we will avoid if we stop to this unit in our organization. We will save only 500,000. Cost that's mean 3,500,000 of this cost we will not be able to avoid. That's mean if you take it from outside, you will save $1 multiplied by 2 million earbuds. That's mean we will save 2 million here, but you have also here there is 3,500,000 here. You will not be avoided. You should pay this here 5. So you save there 1,500, but here you should pay 1,500. So that's mean. Let's see here the analyze. So you should to make analyze this first column is continue reduce this units in our organization, make earbuds in our inside our organization, and another column to show the information regarding outsource these units if we buy it from outside, right? And here, what will be the difference? First, we will start with variable cost. If we make it in our organization, we continue reducing this units in our organization. Variable cost, as mentioned here, $6. So variable cost, $6 multiplied by 2 million units that we will use. So how much will be now the cost of doing this earbuds in our organization? Added to the variable cost, it will be 2 million, right? If we want to take it from outside, we will pay $7 multiplied by 2 million unit. We will pay 14 million. So the price that we will pay to the other organization is considered as a variable cost. So if we will continue making this unit in our organization, variable cost will be 12 million, because variable cost as mentioned in the question, $6 multiplied by 2 million unit. So variable cost here will be 12 million. And if we want to purchase it from outside, we will pay $7 for each one, as well as we purchase. Yeah, that's mean we should pay variable cost 14. So here there is difference. Making it inside is better than outside, right? Regarding to the fixed cost, if we will continue making this earbuds in our organization, it is mentioned in the question here, fixed cost is 4 million. we have to pay 4 million. If we will take it from outside, we purchase it from outside, also as it is mentioned in the question, regarding to the fixed costs, we will not avoid all amount. We only will avoid 500,000. That's mean 3,500,000 will be here also. We will not avoid. We should also pay this fixed cost, even though we will purchase this from outside, right? So here, taking these units from outside is better than make it inside. So there is a different 500,000. So here let us see the total difference. If we make it inside, there is 2 million difference, which is better than take it from outside. So we will save 2 million. If we make it inside, we will save 2 million. And here, if we make it inside, the cost will be higher by 500. So the difference will be 1,500,000. So what is the decision now? See here, total cost for making these units inside the organization is 6 million. Total cost, if you want to purchase this unit from outside, will be 17,000, 17,500,000. That's mean making these units inside the organization is better than purchases outside. What is the idea here? Until the fixed cost should be considered when you make a decision. Don't see, and you should consider fixed cost. As we have mentioned at the beginning, don't see that, okay, the total cost per one unit is $8. I can purchase it outside by $7 is less $1 from outside, so I never to no, you should consider fixed cost because even though if you decide to purchase this unit from outside, also there is a fixed cost, you will not be able to avoid this fixed cost. Actually, we cannot avoid fixed cost because this fixed cost is distributed between a lot of products. For example, if I have a manufacturer, I have 10 products. So fixed cost actually, if it is 10 million, it will be distributed between these two products, between these two, between this 10 products. If you stop one, that means you will not avoid this fixed cost. This fixed cost will be distributed again to the remaining product, right? So fixed cost should be considered when you decide to stop or uh, or decide to continue making uh, any type any product in your organization or outside. So we should consider fixed cost. I think that's all for our session for today. Actually, it is a very big topic, and actually, managerial accounting also help managers to make a plan. If the managers want to achieve a target profit of $100,000, they will come to the managers, to the managerial accountants. They will ask them how many units we should sell. Immediately, we can use equation fixed cost plus target profit divided by contribution margin. We can let them know you should reduce and sell this number of units. Whatever the managers want, we provide all information. So accounting also help managers to make a plan, to make a decision, and so on. Actually, it is a very big topic, and we try to make it very easy like this one. And thank you so much for inviting me. So, Miss May Hannah, you can see there is any question.
Thank you very much, Dr. Mujeeb Saif Al-Absy, for giving such an interesting and informative lecture for all the participants. And now we come to the question answer session. For those who have questions, please raise your hand by clicking raise hand button or type the questions in the chat box and I'm gonna read for you. Okay, sir. While waiting for the participants' question, I want to ask about can we apply managerial accounting such as make or buy decision or special order to especially to small scale business. As far we know, many SMA doesn't have enough knowledge in managerial accounting, but this can be strategy for SMA for especially for their business continuity. How SMA can be learn about this strategy about the managerial accounting to apply into their business. Sorry, sir. You still unmute.
The term you use SM. What's the meaning of this
SMA.
one?
So, small
Small, small.
small medium business. Small medium business.
Okay, small medium business. Actually, yes. Actually, this small medium business is most they face. They actually need more than the big business. If you know that big business, they have a lot of capital. They can produce more than this cost and so on. But for the small, medium business, actually, they cannot compete with the big business. So they should to apply managerial accounting very well because يعني high, the risk would be high. For example, I have a small medium business or a small business. There is another competitor inside to me who have a big business. I should to apply managerial accounting in order to be in a good position business. So maybe I will open a new branch in another organization, in another company, or in another country or another business. I can, يعني, you can extend your business. So you can search about some way that we can reduce our cost or we can increase the price with affecting the competition. There is a lot of way that we can use managerial accounting for our organization in order to continue our work. This type of specialist in company with this problem when they have a competitive high capital market with high reputation, and they have a good business with a small company with this problem like what we speak. So managerial accounting, if we use it effectively, efficiently, we can get a high profit and we can use some techniques that will help us to achieve our goal and to our. If I get your answer or
you, sir. Okay, sir. Uh, okay. It's important for SME, small medium business too, yes. And we can uh, uh, we can see the fact like managerial accounting is very important to manager opinion to create the best strategy for their business. And how about the investor perspective, sir? Can the investor see this strategy can improve their decision uh, to to make a decision for this for the business, yes, sir, yeah. And for the investor perspective, like, oh, this strategy in managerial accounting can suitable for this corporation, and we not just we we uh, we cannot just from the manager perspective, but investor perspective to see this strategy. Can we do that, sir? Not just see from manager perspective, but stakeholder from stakeholder perspective to improve their business use using managerial accounting, I think.
Yes, actually, it is very good question. Actually, the benefit of managerial accounting also it is observed and it should as you know that managers are working in behalf of shareholders. Shareholders also they review. They not by themselves. They have board of directors who will review all the strategies used by the managers in related to managerial accounting. What's the strategy they use? There is some strategy with, for example, regarding to the product. There is two strategy whether we make differentiate products, which will make our product is different than others, and there is cost strategy. We make our cost for this product is less. This two strategy also familiar in managerial accounting. So the board of directors will review and monitor the manager's strategy that's used in the organization. Maybe they use the differentiate strategy for the product, and this one it become very costly for the organization. Then the sales become less. Okay, they focus how they make the product different than others. They improve quality of this product, but the customer they will not be able to purchase this product. In some way, there is argument which is the best strategy. So actually, it's depend on the market, it's depend on the customers. So also, as we have said, at the end, the managers are working on the interest of shareholders, and by the board of directors, they will monitor strategy used by the managers and in behalf of the shareholders. So actually, the end benefit will come to the shareholders. So when managers they use the efficient strategy related to accounting, who will get benefit and who will got any negative result is the share.
Thank you, sir. Okay. Managerial accounting is a very important to use as a business strategy in many business, not just for a big business, but for small medium business too. And we can see from many perspective, not just from manager perspective, but we can see from stakeholder perspective too. So, okay. And okay, right, for the participant, I still waiting for the question. You can ask the question from by clicking raise hand button, or you can chat. You can send your question to a chat. Please, you can ask to our speaker. Especially in Universitas Sumatera Utara, we'll learn managerial accounting with the name of subject, like with name of subject uh, management accounting, sir. Management accounting. But before we the student take management accounting, they must uh, they must take first cost accounting. Cost accounting.
Yes.
Yeah.
Yes, let me say that, let me make it clear. You know, when what is the input for accounting is cost accounting and financial. We use the information provided by financial accounting. So without the information provided by financial accounting, without understanding of cost accounting, we are able to efficiently use. So they call it input is the information provided by financial accounting and understanding of cost accounting, and output also managers to efficiently make a decision. Otherwise, we will not be able to use managerial accounting. We don't understand cost accounting. There is no any information provided by the financial.
Yeah. Right.
All right.
Still same the curriculum, sir. Same curriculum and the name course of subject in cost accounting and management accounting. And yeah, hello all participants. I see many participants in this room, especially many students. Especially my student, I can see their name in this in this room. Please, you can ask the question to our speaker today. It's a very important topic to improve our knowledge. Yeah. I think you can ask everything about managerial accounting. You can fulfill this event with your participant. Yeah, I think you can ask. You can ask the question. Uh, okay, so while waiting, I want
All right.
to I want to ask one more question. just one more question, sir, about like special order. Yeah, about special order. Yeah, I see a special order can make a positive contribution to profitability, and we know about special order contribute to like the additional cost, except the additional revenue from the special order, the contribution margin may be reduced. Yeah, all about contribution margin, profitability, revenue. But based on the consideration special orders, considering contribution margin, will accepting this special order open up new business opportunities. We can use a special order for create or open up a new business opportunity using this type.
Yes, yes, sure. Actually, yeah, it is some of organization they try to open a branch or to seize agent in another country to do sales, and this special order is one type of sales. So, yes, you provide that to a customer either in other city, in the company, or in other country. So this help you to increase your sales, to increase your number of productions. So if, for example, the normal production of my organization is 100,000. So if I get some customer in another city or company, they can take units from me. For example, one is Saudi Arabia, he wants 2,000, one in another country, Bahrain, he will take 30,000 US. So my production will be now with these two customers will be 100,000 the normal product and 2,000 units from those two customers. My production will be now 150 units. So cost will be less when we increase our production. So yes, the cost will be less, our profit will be high, so we can continue on. So this is why we should to understand your accounting play an important role in an organization to provide the information that will help managers to achieve their goal, objective, and to increase to increase the quality because at the end the shareholders what they want shareholders they want a high profit, they want a return on assets, return on equity, so they want to receive dividends, they want to create a profit high number of level. Otherwise this organization will not be able to continue, managers will not be able to stay at their position. So we should to apply managerial accounting in order to increase at the end, increase the shareholders interest.
Yes, sir. Thank you for your opinion. I think
It's fine.
no. Yes, sir. No
Fine.
more question.
Actually, some students they don't they feel shy. It's fine as well as if some.
Shy and little bit tired, doctor. Sorry
Maybe.
for late to joining this your amazing lecture, doctor.
Thank you so much. I'm very happy to be with you actually and to see you here.
All right.
Actually, Dr. Sambas is my neighbor in Malaysia. So
No,
he
Dr. Mujeeb is not my neighbor, but he's my brother.
Yeah,
MashaAllah.
we stay together for long time, so
Right.
become like brothers.
Of course, MashaAllah.
Inshallah, one day maybe I will visit Indonesia. Inshallah. You too.
Good,
Inshallah.
good.
Okay. Okay. Still no more question from the participant. I will give you a more minute to ask the question. But the time
Okay,
it's
Madam Maihana,
okay.
maybe our student is already tired because the
Okay, okay,
activity
right.
from early in the morning.
Okay. I think yeah, I see no more incoming question, sir. Yeah. Uh Finally we have come to the end of today's lecture. But before closing the event, I will give a conclusion regarding our discussion today. Managerial accounting focuses in providing information to the management of the facility to assist it in various functions in the field of planning, control, and direction, as well as decision making. Therefore, managers should have ability managerial accounting to create accurate decision for produce their product. Talking about managerial accounting, it has a control cycle start from formulating long and short-term plans, and the second implementation of plans like directing and organizing, and the next performance measurements, evaluating, and last comparing the actual performance with the plan or controlling. And finally, we come to the end of today's discussion. I would like to thank our lecturer for today, Dr. Mujeeb Saif Al-Absy, for sparing time to deliver such an interesting lectures about managerial accounting for decision making and planning, and for all the participants for their active participation. I, Maihana Bilqis Rangkuti, sincerely apologize for the mistakes I have probably made during this lecture. Thank you very much. Assalamualaikum warahmatullahi wabarakatuh.
Waalaikumsalam.
Good afternoon.
Waalaikumsalam warahmatullahi
Waalaikumsalam warahmatullahi
For
wabarakatuh.
the next, I return to Mr. Muhammad Saka SMC, please.
Okay. Okay, thank you to our amazing moderator and lecturer, Miss Maihana, and also Dr. Mujib for an insightful session on managerial accounting for decision making and planning. On behalf of the hosting committee, I would like to give a certificate of appreciation to our lecturer, Dr. Mujib Saif Al-Absy. Thank you, Doctor, for attending and sharing to us.
You are
And
welcome. It is my pleasure to be here.
yes, and also this is the certificate, and please accept the certificate.
Yeah, sure. It is. I'm very proud to have this certificate and to be here with you. Inshallah, our collaboration will be.
Okay, and now we are going to take a picture together. And also, I urge to all participants, please turn on your camera. Okay, we start from first slide. 3, 2, 1, cheese. Okay, next slide. 3, 2, 1, say cheese. Okay. Thank you so much to the all participants, and please remember to fill out the attendance form shared in the chat box. And now we have reached the end of our session. Thank you all for joining us. We hope you've gained valuable insight and knowledge from today's lecture. We have genuinely appreciative of your active participation. We also want to extend our sincere apologies if any mistakes occurred, whether technical glitches, content-related issues, or any other aspect that didn't meet your expectation. Don't miss our last two lectures, of course, of the summer course tomorrow by Dr. Nufran Sawirasakti Eskom MEC, the Assistant Minister for Tax Supervisory at Ministry of Finance, Indonesia, and Professor Madya Dr. Azrul Abdullah CAM from University Technology Mara, Malaysia. And once again, thank you and see you all tomorrow.